Hi everyone and welcome back to ABG's Investors Day. My name is Alexander Wadman and I'm an analyst here at ABG. With us today we have the CFO of Petrolia Noco, Erik von Krogh. He will present the company and I will follow up with a couple of questions. With that being said, please go ahead, Erik.
Thank you, Alexander. So my name is Erik von Krogh and I'm the CFO of Petrolia Noco. And I'll give you a brief introduction to our company, where we are and where we're heading. So Petrolia Noco is an exploration and production company based in Bergen, Norway. We were founded in 2011 by Petrolia SE, which is a company listed on the Norwegian Stock Exchange, and is still our largest owner, controlling around 49%. Since the beginning in 2011, we have been involved in 3 operatorships. We have been partner in 10 exploration wells. We are currently an active partner in 13 licenses on the Norwegian continental shelf. So our main assets is the 20% interest in the Dugong discovery. In addition to that, we have 2 prospects with both with a chance of commercial success above 60%, the Løvmeis and the Bounty prospect. So as you can see on the figure at the bottom, the current production is limited, but we will have significant production from 2025 and onwards. So next slide, please. This slide gives you an overview of all our assets. If you can see to the map at the right, we have the current production from the Enok and Flyndre field in the southern part of the North Sea, currently producing around 40 barrels per day combined. The main part of our portfolio is located in the Tampen area in the North Sea, including the Dugong discovery. And then we have the 2 prospects, Bounty and Løvmeis, in the Norwegian Sea. So the figure here at the bottom, as you can see, the activity in 2023 has been limited. Going into 2024, we plan to drill at least the Løvmeis well that is firm, but most likely also the Bounty well and perhaps one other. Next slide, please. This slide shows Petrolia Noco's value creation strategy. And it is 3 phases, starting with the exploration and discovery phase, moving on to the development phase, and then the production phase. In the exploration and discovery phase, we are awarded licenses from the Norwegian government. And this is the phase that we have been in so far. However, with the Dugong discovery and the 2 other prospects, we are in the process of moving into the development phase and going into the production phase. And earlier, this was very difficult for companies of our size because there is a lot of capex. However, a new petroleum tax law that was implemented in 2022 now gives us a tax refund for all the investments related to development, meaning that we get a refund of 71.8% of everything we invest in the field development. So that makes it much easier for us to go into this phase and to keep ownership than it has been earlier. Next slide, please. I'll give you a little bit more information about our main assets. So you can just move to the next slide. The Dugong discovery was drilled in 2020. We have a 20% interest, and the estimated recoverable resources is 56 million barrels of oil equivalents. The estimated internal rate of return is around 80%, and the first oil is expected in 2027. So this gives us a production of around 8,500 barrels per day when it starts. And this the Gong is in the region around the Snorre field, so it will be connected to Snorre and produced from there. So yeah, next, please. The Løvmeis prospect. Løvmeis was actually developed by Petrolia Noco, as we were the original operator of this field. However, we decided to hand over the operatorship to Equinor, and that was a strategic move because Equinor owns most of all the infrastructure in the region. So this prospect has 12 million barrels of oil equivalents, recoverable resources, which is not very much, but since it is being drilled through existing infrastructure and connected to Norne, it is possible to develop the field at a very low cost. And it has a very high internal rate of return of about 177%. So the pilot well is expected to be drilled in the second half of 2024, and production is expected to start in second half 2025. And as I mentioned earlier, this has a very high very high chance of success of about almost 70%. And that is based on that we have very good seismic data and very clear indications of hydrocarbons. So we are quite sure that there will be oil in this license, but the question is how much. Next slide, please. The Bounty prospect was drilled in 2022, and it was a dry well with indications of hydrocarbons. However, after test production and further analysis of the field, the group of partners, which by the way is a very strong group, has decided or that they or is of the opinion that there still is a lot of potential in this field, and it is therefore very likely that there will be a new drilling of a new well next year. So the estimated recoverable resources is 175 million barrels. We have some indications that it might be significantly higher than that. The estimated internal rate of return is 32%, and the first oil is expected in 2031. So this is one project that we are really excited about and are looking forward to see what happens with the drilling potentially next year. Next slide, please. And a little bit on the finance and the share. Petrolia Noco is currently traded at Euronext and OTC, which is a trading place for unlisted shares. We have the ticker PNO. As of today, we have 675 shareholders. And we aim to list at Euronext Growth Oslo in 2024. So the figure to the right shows the 10 largest shareholders as of today. And as mentioned, Petrolia SE and its subsidiary Petrolia AS is the main shareholder. A little bit on the capital structure. In total, it has been injected equity of 510 million into the company since it was founded. And in addition, there are loans from shareholders of 81 million. And we also have 67.5 million in external loans. And that is a facility that is secured by the tax refund. And so we are building up the loan facility as we increase the tax refund. That's a very good way to fund the future developments. Next slide, please. And finally, summary of what I've been going through. So we consider our assets to have very high value potential. We have a portfolio with several low risk, high return assets, the mentioned Dugong, Løvmeis, and Bounty. It is short time to production on both Løvmeis and Dugong that will take the company to a different level than it is today and give us significant revenues. Our projects have a high internal rate of return on the investment. And we plan a listing on Euronext Growth, hopefully next year. Also, the underlying market is currently strong. And we believe that the listing will have a significant impact on the pricing and also the future events like the drilling of Løvmeis next year and also the drilling of Bounty. For Norwegian investors, it is also relevant that the company has a negative tax value, and that means that you will not have a wealth tax on your investments. And finally, we have favorable funding terms for the tax refund, as we have 71.8% of all our OPEX and CAPEX refunded by the Norwegian tax authorities. So that was all from me. So thank you very much.
Eric, and I have a couple of questions. Could you share your thoughts on how the company evaluates the opportunity to remain a license owner all the way through the development stage and up until the production stage compared to divesting and monetizing on discoveries before the development phase begins?
Yeah. As I mentioned, the new tax law that was implemented in Norway in 2022, that will, of course, make it very much easier for us to keep the ownership through the development phase and going into the production phase. as we will be able to finance on the tax refund, and that we of course will have 71.8% refunded the next year. So of course it will depend on project to project, yeah, depending on size, risk, all of that will be taken into consideration. But for instance, for a project such as Lövmeis and also Dugong, we consider it to be manageable to keep our ownership without doing any farm downs or sell. Yeah.
Yeah. Okay. Thank you. And I know you touched upon this earlier, but the Dugong discovery is one of your most important assets. And how do you see Petrolia maximizing the value from these assets? Is it to remain as an owner until the production starts, or is it to divest the discovery?
Well, our main target is to remain an owner until production. That being said, we are continuously evaluating opportunities in the market. So if the right opportunity is there, we will consider to either sell it or potentially swap it for production, for an ownership in a producing license. So yeah, those are the things we are looking into.
Absolutely, thank you. And one of the most promising upcoming events for you guys is the Lövmeis exploration well, set to be drilled in Q3 24. Could you explain why this well has such a promising potential and how it could allow for a fast-track field development into production if it's successful?
Yeah. Yeah, as I mentioned, we have an estimated chance of success of 67%. And that is based on the seismic data that we have that indicates that we don't have any other explanation to the data than that this is oil in the field. So the question is, how much is it? Will it be enough for the license to be commercially successful? But we are very we have high expectations to this license, and also it is the fast track solution is that we have is that we can do the drilling from an existing template, and that saves us time. So we will drill a pilot well already in the second half next year. And then if this is successful, we will be able to produce and install a producer the next year, and it will be tied back to the Norne installation. So since all the infrastructure is there, the cost is low, and it is possible to get production in a very short time. Normally, it will take probably 4 to 5 years from your drill until you have production. Here, we will do it in 1 year. So, yeah.
Yeah, thank you. And I believe this will wrap up the Q&A. Thank you, Erik, for the presentation as well as the Q&A, and thanks everyone for listening. Thank you.
Thank you very much.